Normally, good morning, everyone. I would ask the speaker to come up, but I think I'm going to have to read a little bit about our next speaker. Not because a lot of people don't know about him, but I think it's important to put into context what he has achieved on the continent and why he continues to be such an inspiration. And so please, for those of you in the room, I encourage you during the class today, please don't wait for me to ask. If there are questions in the room, just raise your hands and we can ask him the question. Baba Soyoye has been an inspiration to me, I think to some of the people in this room as well. And as far back as I think it's 2004, himself and Tokbe Lawani, they co-founded what is Helios Investment Partners. I think by mile, it is the largest Africa-focused private investment firm. Helios has invested over $3.2 billion across all funds and co-investments, with approximately $820 million in co-investments as well. This has been in 37 portfolio companies, operating across more than 35 African countries. As of December 2024, Helios had realized over $4.3 billion to date, with 65% deal flow being proprietary across all funds. The firm has supported 4.3 million direct and indirect jobs, and it has become the largest emerging markets focused private equity firm globally to receive a B Corp certification. So with a pioneering approach to investing in Africa, there's also a number of firsts on the continent. It created the first independent towers business, Helios Towers, in 2009. It issued the first African green bond on the LSE, on our international securities market. It was the first institution to support and actually achieve what is an indigenous people argue, but I would probably say the first unicorn, I would say, into switch. And guess what? They are not tired. They're currently raising a $750 million fund and the same strategy to support consumer, non-discretionary digital infrastructure and tech-enabled businesses and financial services technology companies. Without further ado, could you please help me welcome with a warm round of applause, Babatunde Soyoye. Sorry, Baba, I had to read that.
Thank you. Actually, one thing you forgot to mention is I think we've actually listed 3 companies on the LSE. And they've been FTSE, I think we're the only African PE business listed 3 companies on LSE that have been FTSE 350 companies as well.
Okay. I didn't want to be like I was choosing my own. I didn't want to be choosing. I didn't want to say that, but
we're the LSE, so I have to say
that. I think when I just sort of thinking again, we should actually change this topic. Andrew has just left the room. We should change this topic to winning in Africa. Investing, building, and exits. I think that's what we should have actually changed the title to. But Baba, I'm going to ask you the first question. Mm-hmm. Why?
Gosh, that's a deep philosophical question. It's a great question. The why I think is, you grew up in Africa, spent a lot of my time, education outside of Africa, but a lot of strong connections, family, and going back and forth. I think I've always had a strong entrepreneurial drive and desire throughout my university days, and worked in a big US private equity firm. And in those days, it was a totally new industry. It wasn't so long ago, probably, a handful of firms globally that actually did this thing called private equity. And I was fortunate enough to be in the industry And then come round about sort of 99, 2000 with the, you know, well, looking back in hindsight, it was the Africa Rising story, but at that point in time, it was elections were happening, GSM phone licenses were being issued across the continent, governments were issuing different bank licenses. It was just an opening up and transformation of just Africa. So, spoke to my friend Topo Lawani and said, "Got to do this," because, yeah, and the rest is history. I think it was just the opportunity to apply the skill set one is achieved in the West to the continent and drive impact, and opportunity plus skill set coming together to make it happen.
But I mean, yes, I mean, loads of smart Africans. But what is it? What did you see that others don't know? What are the things you're seeing that others didn't see or are not seeing?
It's what people talk about. It's over 1 billion people, young, technology, people who are just naturally adopt technology and use technology in a more native way than the rest of the world. And I will say as well, a youthful, innovative set of people that I think one could actually relate to at a fundamental, basic level.
Okay. Yeah, okay, that's great. I mean, a lot of people have tried, right? And I think someone was saying today that there's a company that sort of closed shop a few years back. What has been sort of your differentiating strategy, and perhaps what it is that it's the USP for Helios that makes you continue to succeed?
Yeah. I can't give trade secrets away, but I'll say it's just a desire and ability to continually think really deeply. Yep. Sort of Africa Rising story doesn't, yes, even in the Western world, there are periods where everybody makes money doing stuff, but actually it's just fundamentally being deep thinkers, deep analytically, and having an approach of trying to be where everybody will be in a few years, but I think the benefit of being here helps a lot because you see a lot of developments outside of the continent that you can sort of see where you think things are going to go to. You also get the benefit of actually knowing where the buyers are, the people that might actually want to buy something in Africa in a few years. You're talking to them, you sort of get an idea of what they might be looking for, so that helps you refine what you're doing to look for things that for exit that you can sell a few years down the line. So I think it's just thoughtfulness and then continually reinventing oneself. Basically, break it, rebuild it continually, and don't sit still.
So it's not Lego, huh?
It's not Lego. It's not Lego.
No, but I mean, every time people talk about Africa, I mean, I've been sort of following the continent for a while. People talk about risks,
yes,
right, and somewhat sort of political, regulatory. But I just said that you're 37 portfolio companies across the 5 countries. So it's not a Nigeria play alone. You're in several markets. Yeah. How do you sort of put this into context and actually put money to work in the manner in which you've done?
So what I'll say, I think, is I can remember the first time we actually were going to invest in Egypt. And it was not too long after Morsi had basically Sisi had come back.
Was that Fowry?
Yeah.
Good.
Yeah.
Okay.
I can imagine that IC would not invested in the country before, and we're advocating. We saw an amazing business that was doing had amazing potential, which actually was not visible to all at that point in time. And I think that gave us the nature of the business. I think if you've invested across the continent, especially a place like Nigeria, which I think is quite challenging, you develop a sense and nose for what makes sense. And what we try to do, by the way, is that when we invest in businesses from very early days, we've had a philosophy that avoid businesses that rely on the government, either as a customer or supplier, because the risks of political randomness happening is extremely high there. So I think we just sort of have what we don't do. We have rules on what we don't do. And that's helped a lot. And then I just think being thoughtful and having people in the firm that come from all these countries as well helps. And having a network of friends and advisors and supporters all around the world, investors from the various governments who help you, give you intelligence and help raise your intelligence on what's going on the market. And just basically being really thoughtful about everything you want to do before you just go ahead and do it.
Okay. Okay. So let me take you back. I mean, some people might not know about. You also sort of took over the Modern Africa Fund,
Yes,
which is
yes,
way back, and I'm probably showing my age now. But tell us, how was it your first check? Because then you gotten some LPs to back you. What was your first check on the continent, and that experience? Was there a war story around that? And in writing that first check and convincing them, like two Nigerians at a time working overseas, trying to sort of invest in this company, and what was the size of that check you wrote? I know you've exited it now, right?
Yes. So I think in Modern Africa we took over. We didn't raise the money. It was a highly distressed fund that had been one of the first funds on the continent, one of two funds that were raised on the continent, I would say, I just be gentle and careful what I say, but it just been so badly managed and invested, so the combination of both. But that was not us raising the first check. The first check was we did start a business called Helios Nigeria first before we raised the fund. And our first check came from, right now, South Africa's president, Cyril Ramaphosa. In Shanduka, he was then a private sector person and gave us the first check for our first deal on the continent. Then with regards to the fund, though, the first check did come from BII, or CDC back in those days. And I think they gave us because we did go out set off to try to do things deal by deal.
Okay.
And then we realized that's why we did the towers business first, and we worked on a few other things. And then we realized to take advantage and execute on all the various things we could do, we needed to have a structure with capital that we could call around and raising money every time. And we went out to raise a fund, and BI was the first person to CDC today. CDC back in the past to commit to us.
You probably just answered the next question, because then you started deal by deal, right?
Initially,
and then, of course, they started working and put a structure behind it and raised the fund. Yeah. And what was that thing? What was the thing that you took into the room and said, look, we're going to convince this guy around Africa? What was the one thing between you and Tokbe at a time that you guys took into a room, to a meeting when you were trying to raise capital for a continent that everyone sort of thinks that the deal climate is quite opaque? What was that?
I think in hindsight, I would just say timing was excellent. Because if you look now, there was a time where you had Kingdom Zephyr, Helios, you had even KKR had Africa, Carlyle came into Africa. There was so everyone had, you had UK hedge funds. I was doing a deal in a Nigerian bank, and a friend of mine that ran a UK hedge fund, I found out he was the person competing against me to invest in that deal. And I called him and said, what do you do? They don't know where, there's a map of the world, where is Nigeria? Or they couldn't point it out. And he said to me, it's a macro play, just a pure macro play on it's a derivative play on the oil price is what he said to me. So the point was a period of probably calling from 2011, 12, where actually a lot of people actually found Africa interesting. Yeah, the macro characteristics and the rest of, and even at that point of time, the multiples for African businesses were actually higher in many cases than multiples for European and American businesses. It's actually easy to forget all of that period because it's just so far away right now. We just have the exact opposite right now. It's impossible to raise capital. Multiples for Africa are half what they're for the Western counterparts and so on and so forth. But I'll say simply, we had the experience, we had the strategy, people believed and trusted in us. Actually, I won't even say not quite, because when we went initially, we said we wanted to raise money to do deals of an average of, call it $75 million a year, $75 million per company. No one thought it was possible in Africa. Everybody thought Africa was $5 million type check investments. So they gave us the first fund, was a $300 million fund, but we raised $300 million of co-invest beside it. So we proved that actually one could successfully make sizable investments in Africa and generate returns for the investors. And that's what enabled us to do the Fund 2 at $900 million.
Wow. Wow. And so, Baba, just on that point, when you think you're competing with someone who's in the UK, as you said, a hedge fund, was there an emotive reason for you, or you just said, like, this is just an opportunity and I'm just going to do it? Or was it something with a lot more emotive in terms of you deciding to pursue Helios as a platform?
I mean, I think in life, I'll just say, I would probably say my logical brain was more at work than the emotive, which is simply, if you think in any business, you try to go to where you got competitive advantage. Private equity was an asset class that exists everywhere in the world. It's small in the US, it's small in Europe, compared to everything else, listed equities and family-owned businesses and the likes. And something we understood quite well, something that was very undeveloped in Africa. We were African, we knew the place quite well. So just from a logical standpoint and commercial standpoint, it was something that definitely made sense to do. The emotive side was, it was there, but it wasn't the driving force.
Super. I'm going to pause for 2 seconds, just take a pulse of the audience. Does anyone have any question before I move on to, I want to talk about sort of building now. We talked about investing. Anyone got a question in the room before we move on? Okay, super. I see. Please, Franklin, go ahead. Someone's bringing a mic to you, actually.
I would just ask, could you compare the...
No, do you mind just telling the audience what you do for context, please?
Hi, my name is Frank Widemo. I run Bayless Emerging Markets. We are a much smaller firm trying to walk in the wake of the famous Baba. So my question would be just to maybe comment on your thoughts around the difference in the sort of investor appetite then versus now, because I do appreciate what you said about the early 2011 period and that sort of Africa rising trajectory, and I think things are a little bit different now, and I wonder, how what your take is on that, and how Helios has been very successful even in that environment, and what you've done to sort of maintain that sort of momentum even through the more challenging investor headwinds. Thank you.
Okay. Is that more of a question about now than then?
Yeah, just the change in the investor appetite towards Africa in particular.
So I mean, I would say it's just not an African thing. If you look globally, the last 15 years has had the LSE has been roughly flat until this year. The DAX has been flat, and all the money in the world has just basically been siphoned by probably, 8, 10, 15 companies in the US. Yes, and that's what's happened to the world. The world has just had a phenomenal period of where you've had 8 to 10 companies and things that supply them or look like them and sound like them just siphoned all the money in the world. And it's not just an Africa thing. So you've had this phenomenon for the last 15 years, which is actually on the cusp of changing. Yeah, there's loads of, given the current level of volatility and uncertainty in the US, people are now realizing that they are way overweight their portfolio to the US, and there's now a need to reverse that overweight and look at other markets. I guess Africa would be at the tail end of that so-called other markets, but Africa would benefit quite clearly from this sort of volatility in what's going on and people rethinking how they allocate their capital. Yeah.
Good. Right. Thank you, Baba. And it's just
Does that
moving.
answer your question?
Yes, thank you.
Okay.
Just now moving to building. So now you've invested. I mean, and like you can talk about a number of the portfolios which you've grown from almost zero to $1 billion and more. I often hear the need to diversify very quickly. Some of them are single country companies, and the ideas have grown and they become quite systematically important in their markets. How do you help those companies to navigate and drive to scale? Because that's quite important. I often say, if you're not a gorilla in your market, don't send out monkeys. right? So become a gorilla first before you send out monkeys. But how, 35 plus companies, you've done several exits.
Yeah.
How have you journeyed through this process in terms of building scale?
Yeah. It's a great question. I think it comes from actually from the investment. It comes from just what you design to do from the beginning. So I said earlier, from the very first time, I think we're the first people to go out and look to raise money to invest an average of, pick a number, $50 to $100 million per investment in Africa. It was very rare. No one believed it. And the logic why we did that, we thought one had to invest in what we call systemically important businesses in economic plumbing of the continent's key markets. So if you start, which I think is what you're saying, kind of build a gorilla. So, yeah. And also believe that you got to be the market leader in whatever it is you do. Yeah. So if you start with that as an approach, which was our approach in the initial years, the result is companies that are scale, number one. Two, they're economically important, which means when buyers want to come and buy businesses, they're the first companies people will consider and look at for exit. Yeah. And realize that to do that in the continent, you had to actually roll up your sleeves and prepare to either create businesses from scratch. We've done quite a few of those. Or support businesses and CEOs to take their businesses from, call it from 3 to 8. Yeah. And so from the very first day we started the firm, actually, we did have the third person that joined Tokyo and I as a gentleman called Femi Tadroshu in Lagos as an operating partner. So we always believed that you needed to have a team of people with operational experience, on-the-ground experience that understood the workings of business and problem solving across the continent and the markets where you're going to operate the most. Over time, what we've done is as we've looked around the various investments we've made, we've identified as a pattern of particular things that actually repeat themselves, be it finding the right CEO, which I think is the most important aspect of everything, with the right vision, with the right skill set, with the right level of ambition to become a gorilla before he gets his monkeys. And so we've really got off and actually built a team that's gone from one that had just former CEOs, CFOs, to one where we have technical competence of things that we see most commonly across the various businesses, but then with a network of former CEOs, CFOs who actually act as advisors and help us as and when required. So so we've changed the model once again of just how we support our businesses, from generalists to having real specialists who can actually add value to the various functions of the business, and then generalists to support and deal with the issues and problems as they come up.
And so, thank you, Papa. So, do you build it in that market, make it huge? Oftentimes people say, oh, look, oh, you're single, you got Naira, you need to diversify into new country. Is there a local currency? And I think that's also another point we need to talk about, because most businesses that are in this room, they have no dollar revenues. They have mostly Naira, they're raising dollars. I mean, how have you solved for that, in terms of as you're scaling your businesses? What's your magic formula, or what was the magic formula you used to help these companies deal with these challenges?
So the biggest issue for us, that probably everyone in this room understands, is if you invest in US dollars, you want to have US dollar returns. At the end of the day, when people give you money, you got to actually start with a mindset. Well, I forget PE, even if it's a private, raising money in the stock exchange or whatever it is, people give you money, they want to actually have ability to sell and get their money back plus profits in the future. So you got to actually go in with that mindset, not a mindset of I'm building a business. If you're raising money from people, you've got to take on the responsibility very seriously, extremely seriously, of thinking through, I got to give you your money back when you need it. Yeah. And the biggest killer of returns on the continent has been currency and FX. And so applying a lot of thought to it, and there are many ways to address it. I'll give you a good example. I could go to Egypt and Fowry, yes? When we invested in Fowry in Egypt, the Egyptian pound to the US dollar was 12 to 1. By the time we sold our last check, it was 60 to 1. Yeah? But we still managed to make 5 times our money, 30% US dollars in that period. Yeah? And it's Egypt only. Yes? It's local currency. Yeah? So the point I think is that the question is why. Yeah? The question, yeah. So I think the point is having local currency businesses that have the right characteristics does not penalize you in terms of you could actually argue people could have made more money. Maybe that's the argument you might give. But the point is to make very good returns investing in local currency businesses that are single country. But you've got to be really, once again, very thoughtful of the characteristics that are required to make that, to get that kind of outcome. And it's probably 1 in 1,000 businesses in the market that can generate that kind of opportunity and kind of returns, or maybe even less. And it's about looking for them, knowing what you're looking for. Not every business is not the same. You don't have to. It's not because you like a business you invest. I've invested in a business I don't like, but know that the characteristics of the business or the deal are going to generate returns for my investors.
So, thank you. So, I mean, I suppose that's the reason why you have an IC. The businesses which you've reluctantly written the checks, but you know that the returns are great. I mean, I'm not talking in terms of principle, because I know as a firm, there's just some businesses you don't invest in anything with B2G. But talking about sort of moving, and maybe take it to the next line now, where we talk about transforming a good business into a great investment, right? And the all important talk around exits. Oftentimes when I speak to founders and when they're looking to raise money from investors, right? I don't know, I suppose maybe they're just razor-eyed about getting the money. They often don't think about the investor requiring the money back, right? I mean, it's that bit about exits. So when you take the money on Monday, this investor is going to need it back on Sunday, right? Because I'm a firm believer that capital needs to be recycled. And when you take an investor's capital, you should have an idea of return on and return off. So I'll ask you 2 questions in one. You've successfully executed a number of exits. Can you tell us, what do you do? What have you done, or what do you do differently? When you write the check, do you start from day one and saying, hey, XYZ tech company, here is $75 million on these terms? Is it explicit? What's your process?
I think there's no silver bullet to anything, but once again, everything starts from the beginning.
Yeah.
Yep. And it's about when you're buying the business to have a view on what the options for exits might be. I mean, we say if a business is only got one exit option, unless it's like a put to someone you know would honor it, you got to have multiple exit options because no one knows the future. That's the first rule. Yeah. And they got to be real exit options. So the work we do includes speaking to potential buyers. We know what I said earlier, what they might be looking for, and the likes. And we actually have a laser focus from day zero, making sure the CEO, that's come over time. Some of the initial deals we did, we didn't focus too much on those things. But now, from day zero, our CEO knows this is the exit, sort of within 5 years, we got to get out. So we have these discussions really, really early to make sure everybody is clear to everybody, is unambiguous to everyone. And when sometimes actually some things we're looking at right now, you realize it's sort of more than a 5 years, a 10-year build period, it's fine. But just have an honest, open, frank discussion up front to avoid tensions later on. And you put in incentives and rewards that align with your desired ambitions of liquidity and exit.
Thank you. And so do you decide, I mean, as you said, it's not clear. Are there specific companies you think, okay, look, this CEO is really good, this company is great, investors will like it, this is fit for public markets, or you just run door track processes when you start your exit?
One thing.
Say, for example, I think one of your companies, like the CFO is in here somewhere. Okay, it's Manjit, Helios Towers.
Okay.
All right. Do you decide? I mean, this is perhaps one company you started in one of your boardrooms. How did you? Can you tell us on that journey?
Yeah. I mean, the philosophy we had was the companies we listed, for example, on the LSE have been Vivo Energy, Cab Payments, and Helios Towers Africa. And all of those businesses were scale, They were Pan-African in nature. They were multi-country. They had each of them had sort of more than 10 countries in Africa, so they're diversified by country. And they had what you might call sort of dollarized revenue, so, sort of dollarized revenue. So those characteristics, so you look at the characteristics of the business, yes, and decide where you go, what you want to do with it,
Okay.
at that point in time. I mean, most times our job is we don't really care who. We prefer to sell, because if you sell, you get all the money one time. If you IPO, you're only getting a small amount of money, and there's a lot of work to sell done over time. So a strategic sale is by far the preferred option. But sometimes that option is not on the table. So IPO will sell down over time, then becomes the approach to take. So it's not a one side. We've also done domestic IPOs like Fairfax in Egypt, Equity Bank in Kenya. So, yeah, and those worked really quite well for us too. But those are single country businesses. Yep. When we did Equity Bank, it was only Kenya. When we did Fairfax, it was Egypt only. So listing them in the domestic markets seems to be the right. So I think you just do whatever is right at the point in time you get towards exit.
Okay. Yeah, thanks. And is there any? Well, I suppose maybe there would have been a few of your companies where you're probably just singing "End of the Road." Although it's time, like. And so, do you decide between are there ones that you decide you want to hold for long term, or versus exiting? Anything in your portfolio that you think, okay, well, this has still got a few more legs to go?
Of course.
Yes.
Of course. And the business was sold, and the people that bought them and are probably going to make more than us from it, and we knew it when we sold them. But the job of our business is not to maximize value in a business. Yeah. It's to return money. Even the 5-year hold period is too long. If you look at the West, like 3 years, 2 years, 3 years. So it's the recycling of capital is the job of a private equity or venture capital investor. If you had a permanent capital vehicle, you could do what you're saying and hold assets for longer. But what people now do, they have things like continuation vehicles. So if you've got an asset that looks really good, you've got to just get out of it and create something that allows a new investor. So our job is to recycle money for our investors.
No. And so, just on that point, it's a good segue. What's your view around sort of Africa secondary markets? Is there a secondary market potential in Africa? Because a good chunk of that conversation is around how do we create more exits, and is this something you think we will start to see more of, or it's still quite in this nascent?
Yeah. It's a great question. I think, some of what was mentioned earlier by Tom Attenborough on private
securities.
Private securities. I think that's
yes.
a very interesting idea that actually could have a real impact on across many geographies as well. But I think the point I think is secondaries don't. If you look at the US, Europe, if you call secondaries to include selling to another PE fund, as well as having the secondary funds buy. If you put all that together, that's over 50% of exits in Western PE. In Africa, it's less than 2%.
Wow.
So we don't have that leg of exits yet in Africa. People have been talking about it for a while, yes, but having mechanisms, I think they're going to be creative new ideas and mechanisms like that one I mentioned earlier that actually would help. Yeah, private markets investing is still quite new. Huh? If you think of KKR, all these guys, they started 70s, 80s. It's just a very new industry, and it's just continued to evolve and evolve and evolve. I think probably in a few years' time, it's going to be something that everybody has something in their portfolio, of which private markets been part of it. So it's a very early stage of the industry, but the solution of providing liquidity and finding ways to provide that liquidity in alternative, creative ways, I think is the last thing to get solved for the industry to become actually a broadly held asset class.
And so again, sort of scale. What's the next scale opportunity in Africa? Is it digital infrastructure, renewable energy? What are you seeing, and how you said you had a Lego thing. If it's not, we've done it before. We break it down, we build it up again. What do you build? Yes.
Great question. So what we've done is actually we've rejigged ourselves, and we actually have now we've got a permanent capital vehicle listed in Toronto, but we also have 3 legs to our businesses now. So we have the priority fund that does the things you talk about.
Yeah.
We have a green growth fund. It's like a $400 million fund doing investing in battery swapping, renewable energy, agriculture. It's Article 9, which is of high climate impact growth fund. It's not doing infrastructure. It's a growth fund. Yeah. And the third, but most important leg, or maybe not most important, equally important leg for us is something called sports and entertainment. So we created a business called Helios Sports and Entertainment Group that is basically trying to, it's long term, it's a company, not a fund, for that reason, because we think the whole period are going to be very long. And what it's trying to do is play on the demographics of the young, the people that produce and consume content are the young, are youth. And Africa is the place where you've got overweight on that. You go around the world, almost most sports. Even now, you go Africans ski. You go watch skiing and you see Africans on the ski slopes. And I think so over in the future, I think basically Africa is going to be just driving sports. So what we've got in that sports entertainment thing, we've got a partner with NBA. We've got NBA Africa. It's PFL, which is the the two MMA leagues, UFC and PFL. Francis Ngannou's joined us, and we've created something called PFL Africa, and we're going to have the first events in Africa this year. So some of you might know some music genres called Afrobeat or Amapiano, and fastest growing things, we've a company called Afro Nation that has hosted festivals for Afrobeats globally. They have this thing in Faro in June, where in July, it's July, 50,000 people come to Faro for this festival. It's a massive, massive thing. We own that as well. So we just built, and we've got a business that actually manages sports arenas around. So basically we've got a company that does sports entertainment because we think it's just got a long-term trend behind it, with Africa going to be at the heart of that trend for the future.
Wow, thank you, Baba. I mean, I've got mindful of time when I've realized I've just monopolized all of Baba's time. Any questions in the room before we get final thoughts? Oh wow, okay. Can you please introduce yourself, tell us what you do, and then before your question.
Good morning. My name's Sarah Fitzmaurice. I'm one of the founders of Executives in Africa, Executive Search for roles based in Africa. I think what was really interesting to hear was you saying actually the importance of getting the right CEO into your organisations to actually build that scale quickly and release the capital again as quickly as possible. It's something we're obviously really passionate about. We believe actually your leaders are your greatest investment. And really, really important. I'm interested to hear what you've learned over the years about maybe where you have maybe rushed an appointment of a CFO or CEO and actually lived to regret it later because that scaling hasn't come as quickly, and where you've really learned, because I would imagine there's a lot of people here that are early stage looking to scale, and personally I do believe that actually investing in getting the right leadership team, taking your time to get that in, will deliver that return on investment quicker. So just really interested to hear what you've learned on the people, leadership, talent side of things. Thank you.
Cool. Should we take it? Do you want to take two? Or take one?
Yeah.
Yes. Hi. Hello. Do you mind? I think the mic is coming to you. Over here. Thank you.
Thank you, Baba. You touched on.
Oh, you're going to tell us your name and what you do, please.
Okay.
Yes.
My name is Lucretia Chopera. I'm with Catapult Ocean Investments. We focus on investing in ocean generative investments and climate and carbon capture, etc. We're growing. We're trying to grow our portfolio on the continent because of the sheer size and impact of the continent and the ocean around the continent. So my question, in my previous life, I was just in general VC. It's always around valuations. I'm curious to understand your view around unicorns. Our founders hear a lot about African unicorns, But a lot of them are translating now to what we call paper unicorns because they never grow into the valuations. So every time I hear of unicorns, I always wonder, do the PE guys agree on the valuation methodologies that we use in VC to create these unicorns? So I'm curious to hear about your thoughts around valuations and African unicorns in particular. Thank you.
Okay.
So, Baba, you got two different questions.
So,
one is on people,
yeah.
and the other one is on unicorns.
Yeah. So I'll try to maybe be quick. So I'll say on the people question, I think we've actually come up. I'm looking at a deal right now where you've got a great CEO for a small business, and the question I'm asking myself is, as you transform from a small business to a big business, does this person know what is required? And does he have the skills and resources and the mindset to make that transition? Because you can be an amazing person in a small business, but so those are the kind of things you got to ask yourself the question of this is your point of taking your time. And but I think probably the more important thing is something we all get wrong, is that when it's not working, you got to act fast. If you got the wrong CEO, the human nature is want to try to make it work. That's just the human desire. It's easier and lazier to try to make it work than make a change. So if it's not working, it doesn't mean it's a bad CEO. It just means in this particular situation, in this particular instance, what is required is not what the person's skill set is. You've got to make the change faster rather than waiting too long to make the change. Yeah. Does that answer your question?
Yeah. I might try and catch up with you. 'Cause I'm really interested in
Okay.
Thank you.
And then it's the one on this.
So valuations, I think the VC type valuation, I think is a really, really interesting one because, most VCs, they don't really have a valuation because they have Series A, 1.5 time preference, liquidation preference. So actually, you don't actually know what the value. They throw numbers out, but it's not really the valuation of the business because if the last person in has 1.5 time preference and you call the business worth, call it $10 billion, everybody else has got a zero because the last person in has got all the money. So it's actually really, really hard to when you see those numbers, you see banded out to the press. There's very few of those companies actually have this. If you actually sort of peel it down and look at just pure equity value without the stacks of preference and Series Z or whatever it is, it's yeah. But that's where the industry has evolved. And the reason why it exists, I think, which I get, is to give the founders a big stake in it. Because if a business that raises money and the founders get diluted to nothing, the founders' drive, ambition, motivation to want to do amazing things with the business is limited. So it's a mechanism for the founders to try to have as much of the business to keep them engaged and interested for as long as possible.
Thank you, Baba. I'm just mindful, I think we should pass our time quickly, but in terms of closing out comments, I wanted to ask you one final thing. And maybe this is something perhaps personal. What are you most proud of in terms of your contributions to the African investment ecosystem? And what would you say is left undone for the young entrepreneurs in here as well as investors in the room that you really advocate for them to push for?
There's many questions to that.
Well, the speaker.
So I would say I think is the mission is to create a business or an entity where if anyone from anywhere in the world wants to invest in Africa, at least they know about it. They might not come to us, but they think, okay, I got to talk to these guys. I don't think we're anywhere near that yet, but I think that is the mission, is to be the organization and the firm that anyone thinks about investing in Africa, in the things that really matter, they pick up the phone and call to us. So I think it's actually are we there or not? I think we're still quite far from where we need to get to. So we're still building the business. So probably, I would say probably halfway through where we need to get to, but still a long way to go. The advice to general, I think, if one thinks about actually without the emotional, practical, financial support of people around you to get you through the long, dark days and tough times, it's impossible. Yeah, you got to be committed, and have a belief in that's. It's almost religious belief in what you're trying to do, because that's what's going to. Doesn't go like this. Yeah? You're going to have difficult days where you could question yourself, but actually you shouldn't question yourself, because you have a belief in what you're trying to do and why you're doing it, and believe that you're going to succeed. And without those things and the support of emotional, practical, and people around you, it's impossible. So just make sure you realize you can't do it alone, and get the support you need around you to get you to help you succeed.
Thank you, Baba. A round of applause for Baba, please. Thank you. Thank you, Baba.